freedom isn't the result of wealth, it's the foundation. Welcome to Wealth Independence, where freedom leads and real wealth follows through battle-tested strategies, hard-won lessons, and real-world experience. You'll discover how to accelerate your path to true financial independence. And now your hosts, Dustin Bailey and Adam Penn.
All right, welcome back to the Wealth Independence Podcast, where freedom leads and real wealth follows. I'm Dustin Bailey, and I'm here with Adam Penn. Adam, how's it going today?
It's going great. I just got back from the Bay Area.
The words fail you. You can't even think of what to say.
Yeah, well, I don't like that. I always say we're looking at deals, although the topic of this episode is going to be kind of about looking at deals. But I don't know. I got back from the Bay Area, visited a friend, went to a whiskey tasting party over the weekend. That was fun. There was, as you put, more liquor than a liquor store has.
From the photos you showed me, it was I feel like whiskey tasting doesn't do that event justice. Like that.
It was 180 bottles.
Yeah, that's crazy.
Yeah, absolutely
crazy. You said you went to Blue Bottle at the Ferry Building?
Yep, got some coffee.
It's one of my, actually, we're recording this here at the very end of September. I think tomorrow, October 1st, is National Coffee Day. Obviously, that'll be long gone by the time this airs. But
there's a National Coffee Day?
National Coffee Day, October. And the reason I know this is because Blue Bottle sent me an email about it today. So,
oh, really?
Yeah.
It's probably in my inbox, too.
Probably so. Oh, I miss Blue Bottle. Got to go get a waffle. It's good stuff.
You don't have a Blue Bottle in Greenville?
No, they have not made it out here yet. Although I think they're in New York City, right? They
in Boston.
Okay, yeah. So they are East Coast. They just haven't. Someday,
they skipped Greenville.
They skipped right over us. We struggled. We just got Texas Roadhouse, so maybe Blue Bottle's next. We'll see.
See how that goes.
Yeah. Well, anyway, you had an idea for a topic to talk about today.
Yep. Wanted to talk about, you hear from people or, you're talking to people and they're like, the market's going to crash or, I'm just moving everything to cash. And I think I have an example of it that worked out well for us and I believe the investor. There was a friend of mine who I called up and said, hey, we're buying this apartment building. Would you want to partner with us? And he said, yeah, I've recently been pulling all of my stock positions and just holding them as cash, which I don't know that that's the best thing to do, but he was basically sitting there ready with $50,000 to deploy. So that was kind of cool. But because he thinks there's this top of the market, you're probably more in tune with the financial markets than I am.
Yeah, I mean, there's definitely a bit of a narrative going around about, stock market's at all-time high, and you start seeing this in any time that it's at a new high, right? Where people are like, oh, well, that's for whatever reason making a new high. Some people interpret as there's only downside from here, and like a 30-year chart of it going up and to the right would kind of prove that that's not true. But I mean, there's some legitimate concerns. I think there's a lot, particularly around AI, and the level of investment that's occurring there. And I saw an article this morning. It talked about the billions and billions and billions of dollars that are being poured into AI and particularly infrastructure and data centers and things like that. And that the sheer volume of it, the likelihood of seeing positive return of capital on those investments is unlikely. Like there are people predicting that. I haven't done enough research to know, but that sort of narrative is also playing into, well, how much of the stock market right now, you got the top handful of stocks are being driven primarily on AI hopes. And so if that ends up deflating, what happens with the stock market? Coupled with, again, we're recording this here on September 30th. There's a looming government shutdown that's supposed to happen at midnight. So, or maybe it did happen. I can't remember if it's already started, but I didn't talk to the FAA today. I hadn't talked to any air traffic controllers. So anyway, that's obviously playing into things. There's still concerns about tariffs. Like people are, there's this general, I guess, ongoing concern about what the economic future holds. Adam, I told you earlier before we hit record, I saw a tweet earlier today. A guy that always posts very sarcastic things, but he said that Warren Buffett was born in the first Great Depression and he'll die during the second Great Depression, I thought that fits in with this topic pretty well. There's a lot of people that genuinely believe that and feel like that there's this confluence of factors that's just coming together to produce a pretty, bearish outlook on the next few years. So that's a very long-winded way of answering your question, but yeah, that narrative is definitely circling out there, and there's a lot of there's a saying that the stock market climbs a wall of worry, right? And it's where there's even as growth is occurring, there's always these concerns about what the next shoe to drop is, and sometimes that happens, and most of the time it doesn't. On a long enough time horizon, that tends to not be the case. So I don't know if that works as a jumping off point for kind of where you wanted to go for some more of this, but
I thought you were just going to monologue for the rest of the show.
No, I mean, I don't know what there is a definite environment right now of, I think, concern. I think there's a lot of euphoria around AI, and you've got people are growing more and more concerned about, can all of this investment actually be lived up to? Are we going to see positive returns on a lot of what's happening right now?
And I think, what's interesting to me, once again, a lot of my portfolio sits inside of real estate. Probably 90%, 95%, 90%. No, I have a fair amount of oil and gas. 85%. 85% of my portfolio is in real estate. And it's interesting to me, even very wealthy friends of mine seem to want to rebalance into the stock market. And I don't exactly understand it, because they're going from a cash flowing tax beneficial asset to an equity play, right?
Yeah, a number go up play.
Yeah, a number go up play, right? And I mean, we're talking about people who are very successful and don't need any more money. I mean, they don't need more cash flow. The heavy money they have in the stock market could go to zero, and it doesn't matter. But maybe that's a random side comment, but there's people like that who are willing to dump all this money into the stock market, right? So they don't see some massive perceived risk, even though things are high. And I think the comment kind of coming from my standpoint, and maybe opposite of what that person's doing, is just that I don't think it's ever a bad time to go get a cash flowing asset, right? Back to my initial comment of someone saying, "Oh, I feel like the market's really high right now. I'm taking most of my stuff out of the stock market." And I said, "Well, I'm buying an apartment building." "Oh, great, let me do that." Right? Even the people who are very fearful of the high market, when I show them a good fundamental apartment deal or real estate deal, it's a different asset, right? As long as you don't have a bad debt position that's going to, assuming there's some massive depression and great loss, assuming you don't have some debt position that's going to wipe you out, and you have positive cash flow, you're not betting on some magic appreciation, I'm not worried about my real estate plays. They might hurt a little bit. So here's my thought, and here's one of the reasons I love real estate so much, is that if the equity gets cut in half, but I don't get margin called, and I keep the loan, and we're fine, right? The building's still cash flowing, and all of those things, and on commercial real estate, the value doesn't really just drop like that, right? Then you end up with this situation where you're able to kind of ride out the storms, and it's not like on the other side when the value's back to where it was. It's not like, oh, I'm back to where I am. You still had all the cash flow for all that time.
Yeah. Or
tax benefits or anything like that. And you also get the debt destruction. This wasn't supposed to be an episode just talking about the benefits of real estate, but there are so many things. I think maybe positioning the portfolio to something that makes sense, right? Whereas right now, if you have a stock portfolio, let's say it is top of market, right? Tomorrow's the government shut down and everything gets magically better because the government disappears.
That's your dream.
That's my dream. Shuts down and doesn't come back. But no, tomorrow there's a big stock crash, and it takes 2 years for stock values to get back to where they were, and you have to hold that. You might get a little bit of dividends. But stocks aren't high dividend yielding plays, and some of them are little to no dividends. So Most. So I think by having real estate that's cash flowing, you're not able to just ride the wave. You're actually able to stay profitable during the wave, right? As long as my tenants aren't unable to pay their rent, which we have some lower income stuff, so I think they'll be able to pay, then we end up in a position where our income doesn't change on a monthly basis.
Yeah. Are you saying to not fall for the doom and gloom?
I'm saying don't fall for the doom and gloom. Like, there's a lot of opportunities out there right now, right? Like we've got a ton of projects we're working on that just make sense. I mean, we have an oil deal that we're starting to put together. It'll be out by the time this episode comes out, but it's interesting, right? It is. Everything we're looking for is kind of checking those boxes of what we're looking for, right? I mean, the things we're looking for are a good operator who's very ingrained in the project, right? And they're on the side every day. They're aligned with us in that they're not really making a lot of money off the drilling of the well. They're mainly making their income off the production of oil. That's good from our standpoint. They have good operating reserves. They're very transparent. They have good geology. They have good contacts with the drilling companies where they're actually able to get people out there in a timely manner. They just have all these different things that, even when they're in this high market, we still feel like we're seeing great deals, right? We've signed some apartment buildings locally we've made offers on. We've seen just things that make sense that I haven't been seeing for a while, and I don't see a reason to stop doing deals just because some markets are high, right? Now, there's still some, even though all the stocks are super high right now, there's still some that are really cheap, right? Some are way undervalued. So it's the same thing in all places. It just doesn't make sense.
Yeah, I think that there's a good lesson in not falling for the general narrative, right? And like whatever yes, there might be an overarching thing, and sure, I don't know. We don't know what's going to happen. Maybe there is a recession, right? I mean, depending on, is it the standard definition of that, and reduction in GDP for 2 quarters, like, or declining GDP for 2 quarters, whatever. Like, to your point, that doesn't mean there's not good deals to be had. Usually, something like that will mean it's a good time to be buying deals. Because of the fear in the market, because it takes other buyers out, because you get people that are going to sit on the sidelines because they're afraid to take action. So I think more often than not, history shows us those tend to be decent buying times. Again, assuming you're making good decisions. But you're exactly right, Adam. I mean, we've offered on a building last week, and we didn't get beat on price, right? Like we weren't awarded it the first time, but and it wasn't because of price; it was because of terms. And another group that may have had some connections.
All cash.
Yeah, they were coming all cash, right? And we were going to assume the loan. So, I think that we're personally seeing more of that, where it's not unrealistic expectations from sellers around pricing that are causing deals to not go through. So, there's definitely more of these, and it's just a matter of like where you're willing to look and looking for opportunities. There was something you said earlier that made me think about, we try to look for things where there's a supply and demand imbalance. I've written about this several times in the newsletter. Actually, the issue that's going to be going out this week, I'm talking about this too, but in a slightly different space. And that's, if you look for where those opportunities exist, regardless of generally what's going on in the other environment, and you believe that whatever trends are pushing both the supply and the demand side, if there's going to continue to be an imbalance there's probably going to be a decent place to be investing. And so you've obviously got less control over that in the stock market. It was like we said earlier, where if you're just going to roll into a bunch of index funds, that's not really a supply demand sort of game, right? You're playing the number go up game, and you're just hoping that the balance gets bigger
and paying your financial advisor along the way.
Yeah, hopefully not. Yes, and that's the goodness gracious. Hopefully, you're not paying your financial advisor 2% every year just to have them put you in index funds. Like, that's if that's the case, please reach out to us. We'd love to have a conversation about why that's such a big mistake. But I think if you can be more active to that point and look for these opportunities, there's deals to be had, not just in real estate. I mean, you can obviously find these in small cap stocks if you're willing to put in the research. I think it's easier to find these opportunities in real estate than it is in trying to analyze a bunch of small caps and find those, which, I think is one of the benefits to real estate. These deals are easier to identify. And if you don't want to identify them yourself, then find good sponsors, like us, and invest completely passively. And then as long as you agree with the thesis on the deal and the opportunity there, then it's really no extra work on your part. So, I definitely agree with you that I think the not to say that the doom and gloom, I think the things that people are worried about, not to say that those might not happen or things that are invalid, but it doesn't mean that you should just sit on your hands and not do anything, or that there's not opportunities out there. Again, I think history shows us that typically in these times where there's a more macro narrative of fear, tend to be decent times to be deploying capital. Did I bore you so much you started yawning there?
Yeah, that was it. Just listening to you talk is basically enough to put me to sleep. That's why we never get any work done. Every time you start talking, we just straight to bed. No, I think you had good points. And once again, this all comes back to an individual's given risk tolerance, but I think so often people end up I was reading Aspen Funds, Ben Fraser and Bob Fraser's new book, and they talk about a financial advisor, and they talk about how they got a room full of accredited investors, 100 of them, and they pitched them a deal, and they're all like, this is great. Let me go ask my financial advisor. And every one of them said no.
Yeah.
And it was because they didn't want them to move their funds outside of their brokerage account. They can't take a fee off of it. And I mean, they could be a variance of reasons, but I think so many people just go literally hand their money off to someone with a financial advisory license, a money manager, because they believe that that's the right thing to do. And there's a book, I think it's Cash Flow Quadrants by Robert Kiyosaki. He's like, you've got to learn to invest yourself, right? You don't have to be a full-time investor, but you have to learn to invest yourself. And I mean, at the very least, most financial advisors are just going to put you in like 5 ETFs. You can do that without their fee.
Yep. No, that's not to go down that rabbit hole, but that's definitely a thing, right? Like I feel like for the majority of financial advisors out there, their entire objective is to help you understand your own risk tolerance. And then based on the handful of buckets that falls into, they now know the funds they're going to put you into, and those funds they may or may not tell you that they're going to get a commission for placing your money into those funds from the fund provider. In addition, they're going to be taking their fees. So again, not to say that there's not good financial advisors out there and ones that can be true fiduciaries, but I think there's it just inherently has a very big opportunity for misaligned incentives. And it's very easy for a financial advisor to, Adam, to your point on some of these private deals, you shop it to them and they're like, they'll give you a plethora of reasons for why not to do it. And really the core issue is they just don't want to see that money move out of their 2% of that money go away. Mm-hmm. But again, and if you're probably going to get the same thing. If you call up an advisor, it's like, hey, I'm concerned about the market. I'd like to move into real estate. Probably going to get, again, very, very similar sorts of things. So you just have to know that, and have to know that honestly, investing in, Adam, I know you hate this term, but investing in alternatives is a little bit of a contrarian play, especially if you're mainly used to dealing with people who come from the mainstream financial sources. They're gonna continue to feed you the mainstream narrative, even if that narrative is, oh, well, yeah, we've got this environment of fear and maybe there's going to be a recession. We don't know, but stocks are always strong. It's always up and to the right. So just, you got to stay invested. You're only
look at the average of the last 20 years.
Yeah.
So
definitely something to be wary of.
What do you think people should be looking for right now if they were like, I've got, I don't know what a good number here is, a $500,000 portfolio of retirement, whatever, like their investment portfolio is $500,000 and it's all in stocks. What, if they're concerned about where the market's going, what should they be doing and looking for right now? That's not financial advice. We're not financial advisors.
Thank you for clarifying that. Yeah. I mean, I'm obviously biased. I always look for stuff that has cash flow, right?
And you like cash flow?
I do like cash flow quite a bit.
I do too.
Yeah. It's convenient that we both do. So no, I mean, I would be looking for, again, I'm probably the wrong person to ask this because similar to you, I have a very, very small amount of stocks. I don't have hardly any. It's more most of what I have is just my financial curiosity, where I want to own some and play around and trade some options, do some things like that. But I don't do any serious investing in stocks. So obviously I'm going to be biased towards things that are not in the stock market. And I tend to think in buckets of risk. And so are you looking for you just solid cash flow? Again, something like our credit fund that's not going to have this tremendous equity upside to it, but will produce consistent cash flow. I think that's a really, really good base portion of any portfolio. And then from there on out, it's just how much risk are you willing to take with what's remaining, right? And that could be from, a step up from that might be just a value add apartment deal, a little bit risky, not super risky, but riskier than something like a credit fund, and then all the way up to, brand new development. So I like to think in terms of risk. And again, you can model this in the stock market, but I like doing this more in terms of assets that are going to provide cash flow. And so I don't know, that's a little bit of a long-winded way of talking about it. But some of that depends on what you want in life, right? Like if you don't want to tie, if you're at a point in life where you might need some of that capital for life reasons, then you probably don't want to tie it up in something that's incredibly illiquid, right? Like I've had conversations with investors before that are like, oh, well, I've got, 4 daughters that are going to be getting married over the next 10 years. It's like, okay, well, you probably shouldn't be tying up all of your capital in things that are highly illiquid and might not provide you the liquidity you need. So there, you have to balance that too. And so my message here is not that everyone should invest in real estate and invest all their net worth in real estate. I think you've got to be realistic about where you are, what your goals are, and then construct the portfolio around that.
One thing that I'm thinking of is when you're in real estate, right? There's times where I'm trying to compare them to a stock, right? So with most stocks, you're going to have appreciation, right? Maybe the stocks are going to double, right, in a 4-year period, right? That's a great appreciation. Or maybe a stock's going to have a good dividend, right? But it's a pretty flat stock. That's kind of the two standards, correct me if I'm wrong, but you don't normally see a high dividend, high growth stock.
No.
Which is why I think we love real estate so much, which is it is a high growth, high dividend stock, right? You have the growth of the appreciation of the property either through forced value add multifamily or through just natural market appreciation, and you have the dividends of cash flow. So just those things together really are what makes real estate to me just kind of a better alternative.
Not to mention the possibility, the favorable debt that real estate gets, and the ability
tax
for
benefits,
different returns.
Yeah. Anyway, not to beat a dead horse there, but I think there's things to compare and contrast, and I don't think that right now it's a doom and gloom market. I think by the time this comes out, it'll probably be the stock market will see all-time lows. I don't know. Well, maybe we just predicted the future. Yeah.
What's an all-time low? Like 0?
-1.
I think
but
if that,
I think just continuing to analyze deals, right? You just keep looking at what makes sense and keep seeing deals, right? I was talking to an investor the other day. He's like, I'm not ready to invest right now, but in the next few months, next year, I'm ready to do something. He's like, I keep putting, some extra money away that I'm not putting in the stock market, that it's just in a high yield account. And I know I want to put that into real estate. And I'm going to just keep watching all your deals that come out. And when one matches what I'm looking for, then we're going to move forward with it.
and I think that's, again, I know that I'm biased and that's somewhat self-serving, but I think that's a great strategy. But whether it's our deals or someone else, right? Like, I think it's fine. And I also, if you're willing to accept everything that could possibly come with the stock market, the volatility, I mean, maybe there is more upside. I don't know. I think if you've got money that's on a 30-year time horizon and you're willing for it, you don't need it, you're fine with the volatility, then having a portion of your net worth in the stock market's not a bad thing. It's not for me personally. I don't like the volatility. I don't like the lack of cash flow. I don't like the negatives that there. I'm not saying that everything is always
the biggest thing
bad.
For me is lack of tax benefit.
Yeah. The lack of tax benefits, the lack of kind of what you can do as compared to real estate when debt gets involved. Again, going back to the infinite returns, you can't do that. I mean, people talk about, well, you can, you don't have to sell your stocks. You can just get margin loans and things like that. And that's true, but it's not exactly the same. And those margin loans can get called in times of distress. it's not the same. I understand the argument, but it's also not the same as being able to do 100% cash out refinance on a apartment building and go redeploy all that money somewhere else. And now you've got the same set of money working in multiple spots. It's just, it's not the same. So anyway, I think that I don't know that we intended for this episode to be a here's why to invest in real estate, but I guess that's what it's become. I guess we naturally kind of gravitate towards those, don't we?
Yeah. I got nothing else.
Okay. Well, I won't beat this dead horse further either. We can get on out of here. We appreciate everybody listening. As always, if you have found this valuable, obviously please go give us a positive review on Apple Podcast, a thumbs up, like this YouTube video, do whatever you do on Spotify. If you didn't like it, sorry, just close it out, and you can send us a note on the website, wealthindependencepod.com. Let us know. I'll send you a personal apology if you had a bad time during this podcast. But with that, we'll get out of here. We appreciate everybody listening. Just remember, where freedom leads, real wealth follows. Thanks, y'all.
Thanks for joining us on Wealth Independence. This show is for informational purposes only and is not financial, investment, legal, or tax advice, and does not constitute an offer to buy or sell securities. All investments carry risk, and investors should always conduct thorough due diligence and consult with qualified professionals before investing. Until next time, remember, freedom leads and real wealth follows.